there, retirees, and welcome. Thank you so much for joining us today for one of our weekly webinars. I'm Sam, and in just a second, we'll be joined by Michael Corgett. He is one of our financial advisors, and he is here today to speak to you about how the upcoming healthcare increases may or may not potentially affect retirees. Before Michael comes on, though, just a couple housekeeping items. I'd like to just very quickly remind you once again that we are not with any specific company here. We are not with the company you retired from. We are an independent group of financial advisors here, so please keep that in mind as you're listening along. Next, I'll be entering some links throughout this presentation. They're going to pop up right above our heads as we speak. You can click directly on them. They're going to guide you to our website. You can book a free 15 or 30-minute block of time with one of our financial advisors. You can also subscribe to many blogs we have for retirees from many companies. You can also follow us on YouTube. You can follow our LinkedIn page. There are many ways to keep updated with content for you curated by us, so please take advantage of that. And without further ado, we're going to jump right into it with Michael Corgett.
Thank you, Sam, and welcome everyone to today's presentation. Today we're going to talk mostly about Medicare and overviews of Part A, B, and Part D, discuss some of the options with healthcare overall, the significantly increasing costs that we're seeing nationwide. We'll do some comparisons with Medicare and Medicaid, just to give you an idea of the differences between the two. So let's just go ahead and dive right into today's presentation. Bottom line, the nation's healthcare costs are increasing at a significant rate. Medicare and Medicaid are significant portions of the entitlement portion of the federal budget, and they're doing nothing but going up. $8 trillion in total costs out of pocket for the country and us as individuals and our families could be that much by the year 2030. That's just huge. And it's only getting worse. Healthcare cost inflation is probably the worst inflation that we've experienced year after year for the last 20 or 30 years, honestly, and it's not changing. What is Medicare? Well, Medicare is insurance, federal insurance, for people that are 65 years of age or older, certain people under the age of 65 if they are disabled, especially if they're getting Social Security disability benefits, and people with end-stage renal failure, doesn't matter whatever age you are. Enrollment typically happens within 3 months of you turning age 65. It is automatic if you are already collecting your Social Security benefits. You're going to want to consider signing up for Part A if you turn 65 and are still employed. This is something you'll probably want to talk to a professional as well as someone at Social Security about. So, again, just things to consider. But this is what Medicare is. It's our federal insurance program. Now, I will talk briefly about supplemental insurance as well as Medicare replacement plans. And we have a presentation that is strictly designed to tell you all about Medicare supplemental, or what's called Medigap insurance, and Medicare Advantage plans. So you may want to look for that webinar and take a look at it as well. What does Medicare guarantee? Well, first and foremost, it gives you access to coverage for both Part A, which is hospital insurance, and Part B, which is primarily basic medical insurance to see your doctor, outpatient treatment, these sorts of things. It is a standardized program, so everyone around the country has the same types of coverage with the same deductibles, the same co-insurance levels, and the same out-of-pocket. Again, it's basically the federal insurance program. It does protect you against catastrophic loss, but there are out-of-pockets. And probably what's the best thing is there is no denial for a pre-existing condition. You are automatically covered. If you have healthcare problems, they are automatically covered by Medicare. And those pre-existing conditions can be automatically covered by a Medicare supplemental and a Medicare Advantage plan, which those plans are designed to fill the gaps that Medicare does not cover. Those plans come at a cost too. There is a potential premium. It could range from the coverage on the level of benefits that you choose. What does Medicare not cover? Well, it's not a full coverage plan, as I just mentioned. It's got 80% coinsurance, so you're going to be responsible for 20% of the out-of-pocket expenses unless you have some type of supplementary coverage. Long-term care, specifically custodial care of any kind, that is not covered by Medicare. Now, there is some long-term care benefits for those people who need rehabilitation after a hospital stay, but it is very limited, and there are out-of-pocket expenses there unless you have a supplemental or an Advantage plan. Again, there is no cap. You've got that 20% out-of-pocket coinsurance, and you've got co-payments for prescription drug benefits. And it doesn't cover some of the non-essential benefits that you see listed here. Keep in mind, again, Medicare is a great benefit. It does come at a cost, but there are potential out-of-pockets that you can cover with supplemental programs that you can get. And we'll talk a little bit about that here momentarily. Again, Medicare's Part A and B. Part A is hospitalization coverage. Covers hospital stays, the skilled nursing that goes along after hospital stays, hospice coverage, home health care, and there is no premium for Part A. Now, Part B, that's basically doctor's coverage. Doctor's visits, doctor's co-pays, preventive services, outpatient care, these sorts of things. Things that are not done in the hospital. And there is a monthly premium for Part B. That monthly premium this year is $185 a month and would be deducted from your Social Security check if you are collecting Social Security. Otherwise, you will be billed and have to pay for it out of pocket. Part A does have some out-of-pocket costs, as you can see here. Let me get this adjusted. The inpatient hospital deductible is over $1,600 a year and is going up. There is hospital coinsurance after the 61st day, $408 a day. That's a day, okay? And it will go up next year as well. Hospital coinsurance, lifetime reserve days. Once you get past the 90th day, you're going to pay a significant daily out-of-pocket, and skilled nursing coverage, days 21 and beyond age 100, there is a daily co-payment as well. The first 20 days are covered by Medicare. Again, rehabilitation after a hospital stay, the first 20 days are covered by Medicare. After 20 days, it's going to cost you something out of pocket. And again, I can't stress this enough. You can offset these costs by considering either a Medigap plan or a Medicare Advantage plan. So, high income earners, there's an issue here too. For those of you that have been successful, if you as a couple earn a joint adjusted gross income of $212,000 a year, or half that as an individual, you might pay an additional Part B insurance premium. It's called an IRMA premium, an income-related monthly adjustment amount. A lot of words, but IRMA is on the minds of all high-income earners once they reach the age of 65. And your Part D premium, which is your prescription drug benefit, it can also go up. And here is a table that talks about these IRMA increases. Again, $106,000 a year adjusted gross income as an individual, $212,000 for a family. Your Part B premium is $185 a month, and your Part D premium, there is no cost, but you may have a plan premium for your supplemental coverage. Above that, as you can see, there are steps, and they go up. 212 to 266, the premium goes from 185 to 259, and so on. The maximum cost for someone whose income exceeds $500,000 or above, and there are people like that out there, they're going to pay a significant monthly premium. So these are things to consider, as well as when you're planning in retirement, how much income am I going to take from my savings, my IRAs, my Roth IRAs? Do I want to do Roth conversions? These are all things that you need to keep in mind, because you don't want to, if you can avoid it, you don't want to bump your premiums up and have that IRMA cost. You just don't want to have that happen to you. Here's an example of Bob, who is retired, and his younger wife, Jane. What are they going to do? And their income is $212,000. So Bob is not going to pay any IRMA premium, but he gets Part A for free. He's going to pay his Part B premium, which this year is $185 a month. And then Bob is signed up for a Medicare supplemental plan, which you see here is a Part G, which is a good plan. Depending on where you live, it might cost more or less than that. And he's signed up for a Part D insurance premium as well. Jane, on the other hand, is 62. She's not employed. She's going to go to the healthcare exchange, or what's been affectionately known as Obamacare, and sign up for a silver plan. Now, they're gold tiers: gold, silver, and bronze, so on and so forth. But that plan is not cheap. It's going to cost Jane $1,200 a month. So Jane's going to look forward to getting older and turning 65, or potentially going to work somewhere where she can get health care coverage for a substantially reduced out-of-pocket cost. But this is a lot of money, $1,500 a month. That's like a house payment. Health care can and will be expensive in retirement. I do like to talk or quote a statistic that on average, the typical couple age 65 will spend upwards of $350,000 during their retirement if they live to be 85 years of age. That's only 20 years, $350,000. So let's talk about Medigap and Medicare Advantage plans. Medigap is an insurance policy that you buy that supplements the out-of-pocket costs that Medicare does not cover. There are monthly premiums for all these plans. There are great plans, there's good plans, there's average plans, and there's very basic plans. And what they cover is the difference. The great plans cover many of all these deductibles and these out-of-pockets, but you're going to spend probably $150, $200, $250 a month in addition to your Part B premium for that supplemental insurance coverage, just so you don't have to pay any of the out-of-pocket expenses that you have with Medicare. Medicare Advantage is known as a Medicare replacement. The Medicare Advantage insurance carrier becomes your Medicare. Keep in mind, you no longer have the federally insured Medicare plan. Your Medicare is now with insurance company like Anthem, Blue Cross and Blue Shield, or United Healthcare, Cigna, just to name a few. You forfeit your original Medicare benefits. You do have restrictions because almost all Medicare Advantage plans are what we like to call HMOs. They have their own networks of doctors and hospitals and pharmacies that their benefits are covered by. So if you go out of network, you don't want to do that, but if you do wind up going out of network, you're going to be stuck with 100% of the bill. There's also no coverage for international travel with Medicare Advantage, so there are pluses and minuses. Many Medicare Advantage plans don't have a monthly out-of-pocket premium because of the limited amount of benefits. So there is pluses to that. No out-of-pocket monthly premium as compared to a Medigap plan. But your coverages are more limited. Now, a lot of Medicare Advantage plans have changed and are changing even more. A lot of these insurance carriers priced these programs and they didn't price them right, and now they're having to raise the cost on as far as premiums are concerned, or reducing and or eliminating benefits. Something to consider every year. You're going to be prompted to look at this. You've all seen the commercials on television Typically, the last quarter of the year is when you want to review all these benefits. That's not that way for everyone, but it's just something that you get to look forward to. Whoopee, right? How much is health insurance across the country? Well, it is significantly different. In most cases, it could be as high as $955 a month in West Virginia versus $412 a month for that same silver plan that we talked about for Jane in Maryland. It just depends. The Midwest is typically less expensive than it is on the East and West Coast, but it really does depend on what state you live in. I'm going to show you a little bit of information there right now. The premiums, the average healthcare premium for a 40-year-old silver plan, this again, on the exchange, the Affordable Care Act, that's the most commonly purchased tier. As you can see, average $627 a month, an increase of 7% year over year from 2024 to 2025. In Vermont, $1,157 a month. In Utah, $675 a month. And you can see here the increases from last year to this year. They're all fairly significant. They're all double digit, and that's not going to change. Some of the projected healthcare increases by provider in various states. As you can see here, from top to bottom, some very significant increases. 66% for individual coverage in the state of New York with United Healthcare. Cigna in Colorado, 29.4%. Across the board, there are going to be significant increases. These have already been telegraphed by the industry. A lot of these carriers are spending a lot more money on benefits than they're taking in on premium, and they're trying to balance the books, and they're going to do it, and we're all going to wind up paying for it. So this is all in addition to the increases in your Part B insurance premium and potentially in your Part D, which is your prescription drug plan costs. The top 10 projected 2026 healthcare increases by state. We've already talked a little bit about this. New York, 66%, Arkansas, 36%, Washington State, 21%, and so on. Texas, 21%. Illinois, right next door to Missouri, where I live, 27%. All double digit, all significant, and this is going to happen. So you've got to prepare for it. You have to plan for it. Some of the strategies to prepare for these higher costs. Schedule elective treatments before your deductibles reset. In other words, try and get things done in the fourth quarter, especially if you've already met your deductible. Stay in network, use outpatient facilities if you can. In other words, if you have to have some kind of surgery, don't have it done in a hospital. Have it done in an outpatient surgical center because it is a lot less expensive. Switch to generic prescription drugs and away from brand name drugs if you can. Generic drugs are significantly less expensive than the ones you see advertised on television. Max out your health savings account while you're working. I'm a huge fan of HSAs. You get a tax deduction right up front for those contributions. And if you use those dollars to pay health insurance premiums or out-of-pocket expenses, it is tax-free. You don't pay taxes on any of the growth within these plans. I call them healthcare IRAs. And funding an HSA during your working time frame could help you offset that potential $350,000 out of pocket that you and your spouse may wind up incurring over the next 20 years. Certainly won't cover it all, but it'll certainly help to cover some of it. And then let's talk about Medicaid. Medicaid is a joint federal and state health insurance program. It's primarily administered by state governments. It helps to pay healthcare costs for people who just don't have the money or who are on limited income, poverty level individuals, or they just don't have the income that covers their out-of-pocket expenses. Some people do qualify for both Medicaid and Medicare. Medicaid has been in the news a lot lately. You heard a lot about Medicaid. and all of the illegal aliens that were being covered by Medicaid, non-U.S. citizens. There were cuts made to prevent that. Those cuts, I can't tell you where they cut and how deep they cut, but just so you know, there are coverage for those individuals who just don't have the income or the resources for health insurance. So it's just good to know that the comparison between Medicare and Medicaid, well, Medicare, it's a national program consistent across the country. It's administered by the federal government, whereas Medicaid is administered at the state level. It's health insurance for people over the age of 65. Medicaid is for health insurance for everyone who just don't have the means to pay for health insurance. Okay, so just some of the basic differences between Medicare and Medicaid. You know, the big picture, costs are increasing. The Part B premium is going to go from $185 to $206.50 next year. The Part B deductible is going to go up. Part D premiums are going to go up. Out-of-pocket drug costs are going to go up. So everything is going to go up, and you need to plan for that. Healthcare inflation continues to outpace Social Security. I think it's even more than 2.7%. It's going to have a significant impact on retirees' budgets, as you could see here. 40% of the cost of living is going to be about healthcare, not food and gasoline and your utility bills. Over 50% of retirees are cutting their discretionary spending because of these healthcare costs. This is significant. 1 in 3 are reducing the essentials like spending money on food and medication. This is significant. As you can see, the premiums between an average Part B premium or the Part B premium in average medical insurance via a Medicare supplemental plan could be $350 to $450 a month. And these are premiums. These do help pay for the costs, but you still have to pay the premiums. So it's all something to consider. I've said an awful lot about Medicare, a little bit about Medicaid. Just want to educate folks on your federal insurance and when you're eligible for it. I'd look forward to talking with anyone about these things. You know, we here at the Retirement Group are a team of experts with a lot of years of experience. We've got offices nationwide. I am here in the Midwest in Missouri, but I've got clients all over the country. We're very knowledgeable on a lot of Fortune 500 companies' benefit programs. And ask us about our complimentary retirement cash flow. We'd be happy to put it together. Doing planning prior to retirement, whether you do it 5 years or 10 years, get started the sooner you can. Because the sooner you start planning, the better off you're going to be when you retire. You could schedule a meeting with myself by scanning this QR code here on the left. You could certainly give us a call or send us an email at the email address and the phone number listed here. I'd strongly recommend that you scan the QR code on the right and follow our LinkedIn page, where we keep a lot of great information and are constantly updating it with new information. I'd really strongly recommend taking advantage of some of the complimentary services that we offer, much like these webinars. We're here to educate individuals like yourself. We look forward to the opportunity to talk with you about your individual specific situation. And with that, I'm going to go ahead and hand the meeting back off to Sam. I appreciate your time. Thank you and have a great day.